Now going to discuss one very important chapter in CA intermediate, that is input tax credit. So definitely you can expect some good number of questions on this ITC. It's not like a standalone question, but in every question they will connect, and mostly case scenario MCQs also they will be connecting this. First we will understand what is the concept of input tax credit. Already we have seen this in the beginning, that is first chapter. There is a registered person, and that registered person is having some inward supplies, and on that inward supplies there is some price plus GST paid. What is that price? Say 1 lakh plus 12,000 rupees is paid as GST. This 12,000 is known as input tax credit. Again the registered person will make some outward supplies for which they will receive price plus GST, say for 1,50,000 into 12%, that is 18,000 is their output tax. This output tax is also known as gross liability. This 12,000 is input tax credit, which is set off against the output tax liability. So that is the net GST payable. So there are three journal entries in relation to this. First, for purchases, it is purchase account debit 1 lakh, ITC account debit 12,000, to supplier account 1,12,000. Then for sales entry, recipient account debit 1,68,000 to sales 1,50,000 to GST payable 18,000. GST payable shows a credit balance, means it's a liability, and ITC shows a debit balance, means it is an asset. So we can set off this 18,000 against this 12,000. So the set off entry will be GST payable account debit 18,000 to ITC 12,000. So the difference amount 6,000 will be taken as the GST payable, that is net liability. Now in this context we need to understand three terminologies: availment of ITC, utilization of ITC, reversal of ITC. Availment of ITC means taking credit. Where we will take credit? In GSTR 3B. Already I told you, in 3B we have table 4. In the table 4 we will avail the ITC, that is called as availment of ITC. As soon as you enter into that particular table 4 of GSTR 3B, it will travel to one ledger called as electronic credit ledger. So through 3B we will do that. Then utilization of ITC. Utilization means once I avail the ITC, that ITC I will adjust against my liability. That is known as set off with liability. Again it will happen through 3B only. Then reversal of ITC. Sometimes I will take the excess ITC, or wrongfully I will avail the ITC. That needs to be reduced. To reduce the ITC, I will do reversal. Where I will do reversal? In the same GSTR 3B only, we will do reversal of ITC. You can see here in GSTR 3B, table 4, eligible ITC, you can see ITC available. First we will avail the ITC. Then ITC reversed, means reduction of ITC. The balance is known as the net eligible ITC. Okay. So this is what we will be doing in reversal of ITC. Again, where we will do reversal of ITC? Through GSTR 3B. Availment means taking credit, utilization means set off, and reversal means reducing the ITC balance. And so therefore what is the net GST payable? So input tax credit means GST paid on inward supplies, which can be availed as input tax credit and utilized for payment of GST on outward supplies, and therefore net GST payable will be gross GST payable. What is gross GST payable? Tax on outward supply minus input tax credit. So these are the basics which already we know. Then you can see in the next page there are three ledgers which are maintained by GST network on behalf of every registered person. Three electronic credit ledgers which are maintained by GST network on behalf of every registered person. As these ledgers are not maintained by the registered person, so it will have a contra effect. For example, ITC is asset, so it will show a debit balance. As they maintain the ledger, it will show a credit balance, just like your cash book and passbook concept. Okay. Then liability is credit balance, but as they maintain the ledger, the liability will be showing a debit balance. Is it clear? So electronic ledgers, there are three electronic ledgers. One is electronic liability ledger. What does it contain? It contains the gross GST payable, how much ever liability that we have. Then electronic credit ledger, what does it contains? It contains the input tax credit that we have availed. Then electronic cash ledger, it contains the GST that we have deposited. So coming back to this example, so this GST payable 18,000 is there na, this 18,000 will be reflected in the liability ledger. This ITC we avail 12,000, right? That 12,000 will be reflected in credit ledger, whereas 6,000 net amount we need to pay, that 6,000 rupees will be deposited in the electronic cash ledger. Now, look into availment of ITC in GSTR 3B. How much ITC we will avail in 3B? For that we need to read section 41 read with rule 36 sub rule 4. So section 41 contains this information. 41 deals with availment of ITC. What does it say? First, you see the supplier. Supplier will add the invoice in GSTR 1. Which invoice? B2B invoice. What is B2B means? Sale to a registered person, and he will file it in GSTR 1 and say this. So what supplier will do? So supplier will enter the details in GSTR 1. In GSTR 1, so he will take add invoice. In that add invoice, you can see here, so first an invoice will be added. In that, recipient GSTIN will be given. Recipient GSTIN will be given. As soon as the recipient GSTIN is given and this invoice, they will mention the value, etc. and click on save, and they will file this GSTR 1. As soon as supplier files GSTR 1, this data will be auto-populated in the GSTR 2B of the recipient. Now, I am the supplier, I added here. As soon as I add here, it will be reflected in your 2B. So, as and when you open your GSTR 2B, you will be able to see what are all the invoices which has been added by your supplier. So, that data will be reflected here under ITC available. Got it? And therefore, it is reflected in 2B of the recipient. This is called as matched ITC. Matched ITC means that much is reflected in 2B of the recipient. Now, what recipient can do? Recipient can avail this ITC in his 3B, but fully he can take? No. He need to make some adjustments. What are the adjustments that he need to make? This 3 minus 3 plus he need to make. That is, recipient while availing the ITC in 3B from the matched ITC, so total 6 adjustments they need to make. What are those 6 adjustments? 3 things they need to reduce. Means even though it is coming in 2B, but they should not take. What are they? Number 1, blocked ITC. Blocked ITC means there are some inward supplies which are kept under blocked ITC, which are ineligible. Even though used for business purpose, we should not take, like motor car is a block credit, food and beverages is a block credit, outdoor catering is a block credit, membership of a club, health and fitness center is a block credit. Like that we have some list of blocked credits. So even though it is coming in 2B. Sir, why it will come in 2B? Because the portal don't know whether it is a blocked credit or not to you. So because of that, they will be giving it in 2B. They don't know. You purchase, you gave your GSTIN, so portal will give it to you in 2B. But you should not take that credit. Okay. So that's why we need to reduce it. Then non-business purpose. Non-business purpose means personal purpose. So what happens? Many of my relatives know my GSTIN. So what they do, they will buy something and they will be giving GSTIN, my GSTIN, and they will purchase it. And when they purchase it, I will be getting in my 2B some washing machine purchased, fridge purchased, etc. and all. Where from I am purchasing washing machine for my business, and for my business washing machine is no way connected, as if I am washing the clothes of the students. Got it? And therefore washing machine is no way connected to me, and it will come in 2B. Why it will come in 2B? Maybe the portal don't know now which business I am there in. So they will give. But as it is used for non-business purpose, I should not take the credit. Is it clear? If I take the credit, lot of people are taking credit practically. But if department comes and asks, where is the washing machine? Sir, washing machine not there, sir. Then ITC wrongly availed. Unnecessarily I need to pay the penalty. So non-business purpose, I should not take credit. Then exempted outward supplies, that is my inward supplies are used for exempted outward supplies. Can I take the credit? No, I should not take the credit. Why like that? Because when my outward supply is exempted, am I paying tax or I am not paying tax? I am not paying tax, then how can I enjoy the ITC on my inward supply? So I should not take. But portal don't know whether my outward supply is taxable or exempted. So for that reason, they will give me credit in 2B, but I should not take. These are the three things which reflected in 2B or not reflected in 2B. Reflected in 2B, but ineligible. Got it? So these three are coming in 2B, but ineligible. I should not take. What are they? Blocked ITC, ITC for non-business purpose, that is inward supply used for exempted outward supply. Clear or not? Then there are three things which is not coming in 2B. As per law, only whatever is there reflected in 2B. How it will be reflected in 2B? Whenever your supplier files GSTR1, it will be coming in your 2B. Law says whatever is there in 2B, that much only can be taken as credit. But we have three exceptions to that. Even though it is not coming in 2B, we can still take the credit. What are they? Number one, that is GST paid under RCM. Whatever GST that you are paying under RCM, you can take as ITC. There is no need that it should be coming in 2B. Number two, pertaining to earlier tax period. Pertaining to earlier tax period means it was pertaining to January. You have not taken in January, but you want to take in March. You can take in March even though it is not coming in March month 2B, because it was reflected in Jan month 2B. So not reflected in March month 2B, definitely you can take because you have not taken in the month of January. Then reavailment of ITC reversed earlier. First you would have taken the credit, and after taking the credit, because of some reason you reverse the ITC, means reduced. Okay, then again you can reavail the ITC. This may not come in this month 2B, even then you can take. What are the three things? Even though not coming in 2B, we can still take GST under RCM, ITC pertaining to earlier tax period not availed in that period, and reavailment of ITC reversed earlier. These adjustments, 6 adjustments we need to make to the ITC reflected in 2B, then you will get ITC as per 3B. Got it? And this much only can be taken as credit. Now my question is, why will it not come in 2B? Why will it not come in 2B? You purchase and you have it in the books, but why it will not come in 2B? What could be the possible reason why it will not come in 2B? Tell me. Number one, supplier not file GSTR1. Is it clear? Supplier not file GSTR1. Number two, supplier filed GSTR1, but this invoice he missed. Number three, supplier filed GSTR1 but reported incorrect details of invoice. Instead of 18%, he reported 12%. Because of that reason, it will not be coming in 2B, but it will be there in books. Is it clear? ITC as per books, that is based on invoices, versus auto-populated in 2B. Why will there be difference? Because of these three reasons. GSTR1 not filed, or GSTR1 filed but invoice missed, or GSTR1 filed, invoice also reported but incorrect details are there in the invoice. But can we take ITC as per books? Never. ITC as per books is of no use. We need to take ITC only as per 2B, and for that also we need to make these 6 adjustments, then only it will be called as ITC as per 3B. Are you getting this? Clear? What are those 6 adjustments? 3 minus blocked ITC, inward supply for non-business, inward supply for exempted. 3 plus RCM pertaining to earlier month, reavailment of ITC reversed earlier. Be careful, in exam they will give lot of transactions. You need to cautiously read, analyze it, and then only take the ITC in GSTR 3B. This is only called as ITC availed. Okay. Next, you can see this. When ITC as per GSTR 2B is less than the ITC as per books. Say ITC as per books is 4 lakhs, ITC as per 2B is only 3 lakhs. Okay. So why? Because of these 3 reasons. Only ITC as per 2B is relevant for availment of ITC. So only that reflected in 2B should be taken, but whatever is there in your books cannot be taken. As and when supplier files GSTR1 or rectifies GSTR1, carefully listen. So what are the mistakes that has happened here? Supplier not file GSTR1. As soon as there is a mismatch between your 2B as well as your books, what will you do? as a recipient, you will call the supplier, beep, 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 okay, and left, right, center, you will take him. That is what you are doing for the purpose of, like I am not getting ITZ, you understood or not? So therefore, definitely supplier will file, it is your money, correct or not? It is your money, you already paid to supplier and he did not file return, so therefore you will ask him to file the return. You go to an extent where you will take his login details and you will file his return, because it is your money, you need it, so you will file. And say supplier file GSTR1 when at a later point of time. Now can I take ITZ? Yes. As and when supplier files his GSTR1 at a later point of time, it will come in 2B of that particular month. So definitely we can take ITZ, no issue. Then second case, third case, what you will do? Again, you will ask the supplier to rectify his GSTR1. He filed, but he missed your invoice. He filed, he added your invoice, but he reported incorrect information. What you will ask him to do? You will ask him to rectify GSTR1. He will rectify at a later point of time. What is the time limit for rectification? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Today only we discussed what is the time limit for rectification. By that time, the supplier can definitely rectify. Then we will get the credit. Yes, whenever supplier rectifies, in that month it will come in my 2B, then I can happily take the ITZ. You can see here. So when ITZ as per 2B less than ITZ as per books, only ITZ as per 2B is relevant for availment. As and when supplier files GSTR1 or rectifies GSTR1, ITZ shall be reflected in 2B and that can be availed in 3B. Is that clear? Suppose if ITZ in 3B is greater than ITZ in 2B, so this many people will do. What they will do? They will take excess credit than 2B, and that may be because of genuine reasons or that may not be because of genuine reasons. Maybe they want to cheat or fraud the government. They can do that. Then in that case, what is the action taken by the department? Department will send a notice to you. That is Rule 88D. Say this. If ITZ in 3B greater than ITZ in 2B, a system generated notice shall be given under Rule 88D. That is not B, Rule 88D. Rule 88D, and accordingly reply needs to be furnished. So please give the page number reference to Rule 88D and refer that page. Rule 88D. It is in returns chapter. Can you tell me that page number, please? Returns chapter, it is there. If you turn the page, you will find returns under GST. Okay, I will check. You write the page number. Not returns, sorry, not returns. In this itself, page 98. Page 98, this information is there. Page 98. Page number 98, this information is there. You can see that page number 98. Page number 98 you can see. So when Rule 88D gets attracted, tell me, when Rule 88D gets attracted, if ITZ in 3B greater than ITZ in 2B. So look into Rule 88D. What does Rule 88D says? See the trigger point for Rule 88D. When Rule 88D will come, if the difference in ITZ claim, that is, you avail the credit in 3B more than credit as per 2B, immediately a system generated notice will come, that is form GST DRC 1C. You can remember this is Rule 88D na, before alphabet. D before alphabet is C, DRC 1C. And you need to give a reply. So how they will give the notice? Either they will upload in the portal or they will send it over mail. You need to give a reply. What is the time limit within which you need to give reply? 7 days. 7 days. What is the reply that you will give? Suppose if it is genuine cases. What is the genuine cases? Number 1, it is your RCM liability. Ayya, 3 cases, even though not reflected in 2B, you can take na. What are they? Number 1, RCM. So prove that it is RCM liability. So you can reply accordingly. Number 2, what is that? ITZ pertaining to a particular month, not availed in that month, but you are availing now. So you produce that statement, sir, it was coming in January month 2B, but I have not taken in January. So you can check my 3B. So now I am taking. So that will be your reply. And third reason, what is the third reason? Wrongly you have availed and you have reversed, and again you are re-availing. So you will show them, sir, first I have availed in 3B, then I reversed in 3B, now I am re-availing. So those evidence you produce, that is the reply, if it is genuine cases. Otherwise, if you have taken ITC in excess, pay that. Either give the reply or pay the difference, or partly give the reply and partly pay the difference. But you need to respond within 7 days. Pay the difference, explain the difference, partial payment and explain the balance. What will happen if you are not giving any reply, or you gave reply but they are not okay with that reply, then in that case what they will do? They will again give a notice under section 73-74, which is a very, very dangerous notice. Once we get that notice, penalty also will get attracted and they will recover. How they will recover? They directly come and take money out of our bank account. That is called as garnishee order, which you will learn at CA final level. So they will directly come and freeze our bank account and they will take money out of our bank account. That is this show cause notice under 73-74. And till the time we pay the difference or explain the difference, what will happen? Concentrate, very, very important. Till the time we pay the difference or explain the difference, what will happen? They will block our GSTR1, means we cannot file our GSTR1 because there is a notice which is given under Rule 88D. So first, not allowed to file return in GSTR1. If you are not able to file GSTR1, you are not able to file GSTR3B. If you are not filing GSTR1 or 3B for consecutive 2 tax periods, your e-way bill will be blocked. You got it? Your e-way bill gets blocked. And also this will lead to suspension of your registration. These are the 4 consequences. What are the 4 consequences? Till when? Like when these 4 consequences will come? Till the time you are not paying the difference or explaining the difference, your GSTR1 will be blocked. Number 2, GSTR3B will be blocked. Number 3, for 2 consecutive periods, if 1 or 3B not filed, e-way bill will be blocked. Thereafter, number 4, it will lead to suspension of registration. Got the clarity about Rule 88D? So, conclusion. Don't take more ITC than 2B. More ITC than 2B. Whatever is there in 2B, unless it is genuine. Next, you see this GSTR1. What is GSTR1? Already we know what is GSTR1. A return that contains the details of outward supplies to be filed by every supplier, registered person. 2A and 2B, both 2A and 2B contains inward supply details. Both 2A and 2B contains inward supply details. But what is the difference between 2A and 2B? 2A is a dynamic document, which means it will keep on changing based on supplier's GSTR1, like a Google Sheet. I am sending you a Google Sheet. If I modify here, that will get modified there also. But 2B is like a static document. Once a cutoff date happens, by that cutoff date, whatever returns which are filed by supplier, those details only will come in 2B. Is it clear? And that is the difference. You can see there 2A based on GSTR1 or invoice furnishing facility. This invoice furnishing facility concept is applicable for those who are under QRMP, quarterly return monthly payment, furnished by every supplier. Recipient can generate a statement of inward supplies in GSTR2A auto-populated from GSTR1 filed by the suppliers. But 2B is a static month-wise auto-drafted statement for regular taxpayers. It is like 2A only but remains static. So what is the difference between 2A and 2B? Maybe it may come as a theory question, not a task, not important also, but may be asked. What is the difference between 2A and 2B? So type of the return, 2A is a dynamic return, but 2B will be static. TDS TCS details will be there only in 2A. So already I told you, TDS TCS details will come in 2A, not in 2B. It will not be in 2B. Details of invoices if GSTR1 filed after due date. What is the due date of GSTR1? 11th. By 11th, if they file only, it will come in 2B. If they file it after 11th, it will come in 2A. Okay. So reflected, but in 2B it is not reflected. Then when it will be reflected? It will be reflected in next month 2B. However, it is reflected in subsequent 2B. What is the purpose of 2A? Just for reference only. But 2B is for the purpose of availment of ITC. For availing ITC, which return is relevant? 2B. Because we take the ITC as per 2B only na. Next. Say this GSTR 3B. What is GSTR 3B? That's a consolidated return that contains the details of outward supply. How much is my liability? How much is my ITC? What is my net liability? How much is the late fee or interest that I need to pay? Everything will be there in 3B return. Now, say this already we discussed. That is, supplier will report the details in GSTR1 or IFF and he files it by due date. It will come in recipient 2B, that is matched ITC. These are the 6 adjustments we need to make. Then it is called as ITC availed in 3B. First 3 reflected in 2B or not reflected in 2B? Reflected in 2B but ineligible. That's why we will take out. Correct. Next 3 reflected in 2B or not reflected in 2B? Not reflected in 2B but eligible. That's why we are adding this. Okay. Next one. So far what we have discussed is section 41 read with rule 36 sub rule 4. Now another rule. Section 41 read with rule 37A. What does it says? My supplier filed GSTR1. It came in my 2B. Concentrate. My supplier filed GSTR1. It came in my 2B. But what happened is that I availed the ITC also. My supplier did not file his 3B. Means what? He filed GSTR1 but he did not file 3B, means he did not pay tax. Only when he filed 3B he will pay tax. Otherwise there is no tax payment. At the time of filing GSTR1 whether a tax is payable? No. At the time of filing 3B only tax is payable. So that idiot is a smart fellow. He filed GSTR1 and it came in my 2B. So I took the ITC also in 3B, but thereafter he did not file 3B. When he is not filing 3B, I have to reverse my ITC. I have to reverse my ITC. But sir, what is the time limit that is given to him, to supplier, to file the 3B? September 30th of next financial year. What is the time limit given to him, pa? September 30th of next financial year. Means 6 months from the March financial year end. April, May, June, July, August, September. By September 30, he should file the GSTR 3B. September 30 of next financial year. If he files, no problem. No problem. If he is not filing, then whatever ITC that I have already availed needs to be reversed. With interest or without interest? Without interest, if it is by November 30. Means how many months I have? 2 months. October and November. October and November I have to reverse. If I am reversing by November 30, I am the sense recipient reverses by November 30, no problem, no interest, just I need to reverse. If I miss it, then I have to pay interest at the rate of 18% per annum. Are you getting this? Now, see this chart, reversal of ITC if supplier not filed GSTR 3B. Actually here, for whose mistake who is getting penalized? Supplier mistake, recipient is getting penalized. See this. Supplier reports the invoice in GSTR1 and files it within the due date. Understood? Based on this, where it will come? In recipients 2B, auto-populated. So what recipient did? He took the ITC in his 3B. This is normal. Now, supplier not filed GSTR 3B by September 30th of next financial year. So what recipient should do? He need to reverse the ITC after September 30 but before November 30 of the next financial year. If he misses it, see there, if not reversed by November 30 of next financial year, interest at the rate of 18% shall be payable. From which date to which date? From the date of utilization till the date of reversal or payment. You got it? From the date of utilization till the date of reversal or payment. Sir, what is the meaning of date of utilization? That's there in the next part. We will see that, but let's try to understand this first. So if not reversed by November 30th, recipient has to pay interest. If reversed by November 30th, no problem, no interest, just the ITC will be reversed. Okay. Now, can this reversed ITC be again re-availed? Yes. When as and when supplier files his 3B. Supplier will be filing his 3B at a later point of time. As and when supplier files his 3B at a later point of time, we can re-avail this ITC, and this re-availed ITC will not come in 2B. Even then we can take. That's what we discussed. See the previous page. See the previous page. Even though not reflected in 2B, we can take na. Third point, re-availment of ITC reversed earlier. Got it? Re-availment of ITC reversed earlier we can take, even though it is not coming in 2B. One more advantage we have for this re-availment of ITC, what is that? Without any time limit. Usually there is a time limit for availment of ITC. What is that time limit? 30th November of succeeding financial year or date of filing and return, whichever is earlier. But this particular re-availment of ITC can be availed any time. As and when supplier files the 3B after September 30th, we can re-avail this ITC. Understood or not? Now, there is one big question that we all will get here. How will recipient know that the supplier not filed 3B by September 30th of the next financial year? That portal only will tell us. Where the portal will tell? In our GSTR 2B. In our GSTR 2B, you open GSTR 2B after September 30 of next financial year. For example, financial year 2024-25, financial year 2024-25 completed na. Now, 2025 September, 2024-25 financial year completed, 2025 September, afterwards you open 2B. In the 2B, go to ITC reversal. Go to ITC reversal. Can you see there? ITC reversal. Click on that ITC reversal. You will find some amount. This much amount you need to reverse. Is it clear? They will only tell us how much we need to reverse. Means what portal will do? Will follow up with the suppliers and check whether they are filing 3B or not. You don't have to do anything. They will only check. And they will give us the information that these are all the suppliers who did not file 3B. So you need to reverse. Now what is that you need to do? Reverse it. Then follow up with the supplier. What is that? Boss, you did not file 3B, and if you are doing like this, next time onwards I will not purchase from you. So you try to create a kind of pressure. Okay. So that is whatever I said is polite. Okay. Like that and all, no one will speak. And thereafter he will file the 3B. When he files the 3B, we can re-avail the ITC. Is it clear? Next, say this. So, what is the time limit by which we need to reverse the ITC? November 30th. If not, interest will be payable at the rate of, from which date to which date? From the date of utilization till the date of reversal or payment. What is the meaning of date of utilization? Date of utilization means, first we need to see the month in which the balance in ITC falls below the wrongly availed ITC. For example, ITC wrongly availed with respect to an invoice issued by the supplier for which supplier not filed 3B is 12,000. How much is the ITC wrongly availed? 12,000 with respect to a supplier who did not file 3B. Okay. And invoice date is 4/5/2024. Which month? May 2024. Got it? Now, every month starting from May 2024, every month starting from May 2024, we need to see opening balance, ITC availed, ITC utilized, closing balance. May 2024 opening 40 means some previous month closing, opening, plus ITC 32. including in this 32, this 12,000. Got it? In that 32, one invoice is there belonging to that stupid supplier. Okay, 12,000, 12,000. Now, what is the ITC utilized? 50. What is the closing balance? 22. Now, listen, whether the closing balance, that is balance in ITC, is below 12. What is the wrongly availed ITC? 12. Whether the closing balance is below 12? No. So, for May month, we have not utilized the ITC. Is it clear here? First, you need to see the month in which balance in ITC falls below the availed ITC. So, May month we have not utilized. Then go to June month. June month opening balance 22 and plus ITC availed 18. ITC utilized 30. Closing balance 10 means how much we have utilized? 2000. So, balance in ITC falls below the availed ITC. By what extent? 2000 means 2000 we have utilized in the month of June. Again, July 10,000 opening balance, 15,000 ITC availed and ITC utilized 5,000, closing balance 20,000. Balance increased means reversed. No. Balance decreased means utilized. Balance increased does not mean reversed or paid. Is it clear or not? The balance will increase because of many reasons, but balance decreased only you should see. Balance increase does not mean reversed unless you are actually reversing it. Is it clear? Balance increases does not mean reversed. Then next, again August month, opening balance is how much? 20. What is the ITC availed? 20. ITC utilized 36,000. And what is the closing balance? 4,000. Now already 12. 12 came down to 10. Correct? Then how much we have utilized? 2,000 utilized. And that 10 came down to 4 means how much we have utilized? 6,000 is said to be utilized. In which month? August month. Now 2,000 utilized in June and 6,000 utilized in August. Accordingly, this June month 3B due date, August month 3B due date or actual date of 3B, whichever is earlier, will be taken as the date of utilization for computation of interest. Is it clear? So, first you need to see the month in which balance in ITC falls below availed ITC. Step 2, take the due date of 3B or actual date of 3B for that month, whichever is earlier, that is taken as the date of utilization for computation of interest. So, in this case, for June 2000 utilized, for August 6000 utilized, for June and August, see the due date of 3B, actual date of 3B, whichever is earlier. So, you will know what is that date. That date is the date of utilization. From the date till the time actually you are reversing or paying, you need to compute the interest. That date will be given in the question itself. Okay. Next. So, definitely interest computation on ITC, they can start asking because high time they need to ask question on this. Already they tested in one attempt in MCQ. Definitely they can ask this question. So, you need to get the clarity, that's why I gave you this. Understood up to this? What is the meaning of date of utilization? Is it clear? Now listen. What our supplier will do, he will file 3B. Our supplier, if he is not filing 3B only, this torture. Yes or no? If our supplier not filing 3B only, this torture. Supplier filed 3B. But there is a mismatch. Liability in GSTR 1 greater than liability in GSTR 3B. Kindly modify. Liability in GSTR 1 greater than liability in 3B. Then what will happen? This above rule will not come because he filed 3B. He filed 3B. So, now the supplier don't want this problem to happen to the recipient. They don't want to receive the call from the recipient. So, what they did is that if we are not filing 3B only, recipient will come and ask us to file 3B, etc. and all. So, let's avoid this rule itself by ensuring I am filing 3B. Supplier will file 3B. But there is a difference between GSTR 1 and GSTR 3B. Liability in GSTR 1 10 lakhs, but they will show only 2 lakhs as their liability in 3B and they will pay 2 lakhs. How much short paid? Now, for that 8 lakhs, they will receive one notice. See this. supplier filed GSTR 1 and GSTR 3B, but liability in GSTR 1 greater than liability in GSTR 3B. In this case, whether recipient is required to reverse ITC or not required to reverse ITC as per Rule 37A, no. Recipient is not required to reverse ITC as per Rule 37A. When the recipient is required to reverse ITC as per Rule 37A, if the supplier has not filed 3B, he filed 3B, that's why that Rule 37A not applicable to the recipient. Are you with me? Next. Now, who will receive this notice then? Recipient or supplier? Supplier will receive the notice. System generated notice to supplier in form GST DRC 1B. You can remember this easily. This is which rule? Rule 88C. So what is the alphabet before? 1B. DRC 1B notice they will receive. Now within 7 days what they need to do? Same like Rule 88D. What they need to do? Either pay the difference along with interest or explain the reasons for difference. Suppose if they have not explained or officer not satisfied, what they will do? Not replied within 7 days or replied but officer not satisfied, what will do? Recovery of such difference along with interest and penalty. Got it? Now that is what I have given as difference between Rule 88C and Rule 88D. Now what is the difference between 88C and 88D? Situation difference. In 88C what will happen? Supplier reported more liability in GSTR 1 but paid less liability in GSTR 3B. So Rule 88C will come into picture. 88D when it will come into picture, recipient, that is not to the supplier, to the recipient. Recipient availed more ITC in their 3B than their 2B. You got it? Next, both the cases notice will come. Both the cases notice will come. What is the form of the notice? First one is 88C. So DRC 1B. Here 88D. So DRC 1C. Notice will come. And how the notice will be given? Common. They will upload in the portal plus communicate in the email. That's common. What is the time limit within which we need to reply? 7 days. That's also common. And thereafter, what is the reply that we need to give? Either pay the difference or explain the difference or partly payment, partly explain. That is also common. Both the places. Are you understanding? Then what will happen if we are not giving proper reply or we are not making the payment, etc.? Then in that case, for 88C, you observe no further notice. Already notice given. No further notice. Direct recovery. Is it clear? Direct recovery. See there. Recovery of tax liability. Liability posted in liability ledger. But in the next case, 88D, another notice they will give. Already one notice, that is notice number 1. Now another notice they will give and then only recovery will be initiated. This is the another difference. Is it clear? So where we have difference? First place we have difference. First place we have difference. Again, notice form also we have difference. Then if no response or unsatisfactory response, here also we have difference. And what will happen on the impact on filing returns, etc. till the time we explain the difference or pay? Same. This is common. Both the places it is common. What will happen? Our GSTR 1 will be blocked. Our GSTR 2B will be blocked. Sorry, GSTR 3B will be blocked. And because of this 2 months, if you are not filing, e-way bill will be blocked. And this will also lead to suspension of registration. Understood here? When 88C, when 88D, got the clarity? 88C when? Liability in 1 more than 3B. More than 3B. Next, 88D when? ITC in 3B more than 2B. So with this, we completed availment of ITC. Availment of ITC, all the provisions related to that we completed. Now we are moving on to the next part, that is utilization of ITC. So I told you that there are 3 things. First, availment of ITC. Everything related here is about taking the credit only, correct? Second, I took the credit, now I need to set off with my liability. For that, what is the manner of utilization of credit? That is given in section 49 subsection 5. Section 41 talks about availment of ITC. 49 subsection 5 talks about utilization of ITC. Okay, concentrate here. What is the manner of utilization of ITC? Listen. That is, I have credits. I have CGST credit. I have CGST credit, SGST credit. Okay, then UTGST credit, then IGST credit, and compensation cess credit. No need to make note, just listen. I have CGST credit, okay, then SGST credit, UTGST credit, then IGST credit and cess credit. All the credits I have, and I have liabilities also. So this is my credits and I have liability CGST payable, then next SGST payable, and next UTGST payable, and IGST payable, and finally cess payable, compensation cess payable. Now, can I use CGST credit for payment of CGST? Yes. SGST? Yes. No. UTGST, IGST, cess, I cannot use. I cannot use CGST credit for payment of cess. So CGST credit can be used only for CGST or IGST. What about SGST? Means SGST credit I can use only for payment of SGST or IGST. Then UTGST credit means UTGST credit can be utilized only for payment of UTGST payable or IGST payable. Then what about IGST credit? Is there any restriction? Which means can I use it for payment of all? Yes. But compensation cess, I cannot use it for payment of compensation cess. I can use it only for payment of all liabilities other than compensation cess. What about compensation cess? I cannot use it for payment of anything except compensation cess. Now, if you observe this column, that is IGST column and IGST row, there is no restriction. That is IGST liability we can pay using any credit, IGST credit we can pay using, like IGST credit we can use for payment of any liability, correct? There is no restriction with respect to IGST. But in the other cases, other three, CGST for payment of CGST, SGST for SGST, UTGST for payment of UTGST. Got it? Now, this is the first rule. Easily you can remember the first rule or first principle. IGST is like Mr. A, okay, and CGST is like his wife, Mrs. A. SGST, UTGST is like his parents. He will adjust with his parents will adjust with him. He will adjust with his wife will adjust with him. But his parents will never adjust with his wife will never adjust with his parents. You understood or not? So, IGST can be set off against, CGST can be set off against IGST. Then SGST, UTGST against, IGST against, but SGST, UTGST against CGST not possible. Not possible. So always every house same problem only, na, in-laws problem. So therefore this is with respect to that. Before marriage and all it's a different story. No, too much of cringe and all they will be doing, and so she will feel like her mother is not mother, and this person's mother is only mother, like that and all, and this person's mother also will tell two good things. How beautifully she is cooking, how beautifully she is doing everything. The moment she comes into home, every torture will start, okay? And this person, Mr. A, literally will lose the peace in his life, okay? And that is this. So from that example, you can remember this rule number 1. So what are the 2 points that you need to remember? There is no restriction with respect to IGST. That is, IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. Amongst the other taxes, respective credit can be utilized for payment of respective liability, and cross utilization not allowed. Sir, then what about this cess? Cess is no way connected to family, okay? This is like relatives. No way connected to family. They will connect with them only. Got it? Because even if we do good also, they will speak. Even if we do bad also, they will speak. So, unnecessary people on earth. So, therefore, they are no way connected to this discussion. Is it clear or not? And they can adjust only with them. Got it? See, cess can be adjusted only against cess liability. Next, look into principle number 2, priority. What is the priority of utilization? IGST credit, okay. First, IGST credit can be utilized for payment of IGST liability, okay. Thereafter, so I am earning pa. First, I will meet my needs. Thereafter, my wife or my parents. Any priority can I give? No, gone. Life will be miserable, okay. No priority. Any manner, any proportion. Case to case basis I need to decide. Is it clear or not? So my wife should tell you are only important, my parents are not important. And with parents I need to tell you are only important, wife is not important. Case to case basis we need to balance. Otherwise completely gone. Life will become a mess. So IGST credit first for IGST. Thereafter CGST or SGST, UTGST, any manner, any proportion, okay. For me, I don't have any problem, okay. And I'm telling you this because, lot of my friends, they will be sitting with me and they will speak for hours and hours about their problem. I have only one problem, that I don't have parents. But they have a number of problems because they have parents. You understood or not? They will be telling, and from that only I thought this can be connected in the class, okay. So I am connecting this. Then CGST credit, what they will do? First they will be selfish, they will think about themselves only. Thereafter, husband will come into picture. You got it? CGST credit first for CGST, then IGST. Parents also like that only. After marriage, first they will think about themselves and then only, this guy will come into picture. So, unfortunate male on earth. Got it? So, SGST credit first for SGST, then UTGST for UTGST, then only IGST. Is it clear? And seriously, some men regulations, okay? Men related, Indian Men's Act 2025, like that something should come, okay? So, then say this. Principle number 3. Principle number 3, carefully listen. You understood the first principle and second principle? Third principle. Third principle, first, whose money will be gone? Correct. Then only CGST, SGST or UTGST. Got it? So, which credit should be exhausted first? IGST. Before utilizing CGST, SGST credit of IGST should be completely exhausted and order should be followed as per the above principle. Okay. That is, I have observed this many times. Like I am not now carrying any wallet with me. I don't have a wallet. Everything GPay. Or to my people, I have given cash and I will ask them to spend. Because every time I keep cash in my wallet, and my wife will pay all bills. That is milk person bill and every bill, water can bill from my wallet only. She is having money. I will give her. And she is also earning, but even then first she will exhaust my wallet only, and then only if not there, then she will be taking out of her wallet, okay. That's usual. So which credit will be exhausted first? IGST credit before utilizing CGST or SGST credit. Then fourth principle, that is for payment of IGST liability. That is, I have a liability. So what should I do? I should check whatever money that I have. If I don't have, wife. Very good. I cannot directly go to parents because they will spit on my face. Correct or not? So because the moment a male becomes married person, so if he goes again to the parents, definitely they will say, donkey's age you got and still you are dependent on us, like that. So therefore, first IGST liability will be paid out of IGST credit, then CGST credit, then SGST or UTGST credit. Are you getting this? These four principles. Next, what is the difference between that second principle and this fourth principle? What is the difference between these two? In the second principle, I have one credit but multiple liabilities. So IGST first for IGST, then CGST or SGST, any manner, any proportion. But in this fourth principle, I have one liability but multiple credits. Got it? Next, see this, IGST credit after utilizing for payment of IGST liability can be utilized for payment of CGST, SGST in any proportion. So multiple answers are possible in the exam. Then which view should be taken? Depending upon CGST, SGST liability, it should be apportioned. For example, you just write down this illustration somewhere. So gross liability, gross, that is CGST, SGST and IGST, CGST, SGST and IGST. Gross GST is 5,000, 5,000 and 10,000. This is the gross, 5,000, 5,000 and 5,000. And ITC, if you see, 2,000, 2,000 and 10,000. Compute net GST payable. Compute net GST payable. So CGST, SGST, IGST, gross GST is 5,000, 5,000, 5,000 and ITC is 2,000, 2,000 and 10,000. Compute net GST payable. So what we will do in this case first? First, which credit we need to use? IGST for payment of IGST. Gone. Then what is left? 5,000. That 5,000 we can use it for what? CGST or SGST or both? Both. Correct? You tell me, what should I do? Why? If I use full 5,000 for payment of CGST, what will happen? This liability gone. But this 2,000 I cannot set off with 5,000. Correct. So 5,000 minus 2,000, 3,000 becomes my liability, which is a wrong answer. How it is a wrong answer? Simple. What is your total liability? What is your total ITC? So what is the correct answer? 1,000 you should get. Okay. So easy way you remember. What is the liability ratio? What is the liability ratio? Equal up. So excess credit you distribute equally. Liability ratio, if you see, equal. So you distribute it equally. So what is the correct way of doing answer in this case? CGST, SGST, IGST. Gross GST payable. Gross GST 5,000, 5,000, 5,000. First IGST credit. IGST credit. How I will use? 5,000 I will use first. Thereafter I will use 2,500, 2,500 and then the respective credits CGST and SGST credit. How much? 2,000 and 2,000. When I am utilizing, I will get a net liability. What is that? Net GST. Net GST will be 500, 500 and nil. So the total is 1,000. This is the answer. Is this the only answer? No, no. This is not the only answer. There is a possibility of CGST 1,000, SGST 0, IGST 0. Or there is a possibility of CGST 0, SGST 1,000, IGST 0. Got it? Because the total will be 1,000. But any answer you will get marks provided the total of the net liability should not more than 1,000. the total of this is there now, the total of this should be 1000. Then you will get the correct. Okay. And what you need to follow? Simple path. Excess credit, you divide it between CGST, SGST in its liability ratio. That's what note I have given. You have written the answer for this. Now see the note. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST in any proportion. So multiple answers are possible. My view is that depending upon CGST, SGST liability, it should be apportioned. Got it? Then GST compensations should be utilized only for payment of GST compensations on outward supplies. With that, we have completed two parts. Section 41, availment of ITC. Section 49, subsection 5, utilization of ITC. We are left with only 3 sections. These 3 sections, input tax credit will be over, but these 3 are major sections. Section 16 talks about conditions for availment of ITC. Section 17, apportionment of credit and blocked credits. Section 18, input tax credit in special cases. Look into section 16, conditions for availment of ITC. So total 8 conditions we have. Condition number 1, only a registered person can avail ITC. Of course, unregistered person cannot avail ITC, only a registered person can avail ITC. Then that inward supplies on which ITC to be availed should be used or intended to be used. Intended to be used means I am using it now or I am going to use it in future. Even then I can take ITC. Unlike section 32 income tax depreciation, it says only when the asset is put to use you can claim depreciation, but here it is not like that. Even if you are not using it, you are going to use it in future, you can claim the ITC. Used or intended to be used in the course or furtherance of business. Then recipient should be in possession of tax paid document. So tax paid document means what? Either tax invoice or debit note or ISD invoice or bill of entry. ISD means input service distributor. If you want, you write down there. ISD means input service distributor. Input service distributor. Who is an input service distributor? Head office pa. Head office will be distributing the credit to the branch office. There is a head office. Under the head office there will be lot of branch officers, and we raise invoice to the head office. That head office will take the credit and distribute the credit to the branch office. That is also one of the tax paid document on which ITC can be availed. So the recipient should be in possession of tax paid document. What is that? Tax invoice, debit note, ISD invoice or bill of entry. Bill of entry in case of import. And number 4, recipient should have actually received the goods or services. For example, invoice is in the month of May, but the goods are received in the month of June. When the ITC can be availed? May month or June month? June month only ITC can be availed. May month ITC cannot be availed, because only when the goods are actually received, the goods or services, ITC can be taken. Supplier, and one more point also we will see from recipient point of view. 7, recipient should have filed the returns. I told you this, how we will avail the ITC? Only through 3B. Without filing 3B, ITC cannot be availed. So first 2 basic conditions, then next 3 conditions by recipient, next 3 conditions by supplier. You remember like that. What are the first 2 basic conditions? Only a registered person can avail ITC, and inward supply should be used or intended to be used in the course or furtherance of business. And then 3 conditions by recipient. Recipient should be in possession of tax paid document. Recipient should have actually received the goods or services. Number 3, recipient should file the return in GSTR 3B. Got it? Then 3 conditions by supplier. Already you know that. You tell me what supplier should do. Should file the GSTR 1 and report the details. Correct or not? Then he should file 3B, means he should pay the tax. By when he should pay the tax? September 30th of next financial year. Otherwise we will reverse the ITC. Correct? So say this. Supplier should have furnished the details of invoice in GSTR 1. Supplier should have paid tax with respect to such supply within September 30th of next financial year. Then supplier has one more liability also. GST paid on inward supply should be reflected in 2B under ITC available and should not be restricted. What does it mean? If you see here in GSTR 2B, there are 3 columns: ITC available, ITC not available, ITC reversal. If it is there in ITC available only, we can take. What if it comes in ITC not available column? We cannot take. Why will it come in ITC not available? Because of the supplier's mistake. Because of the supplier's mistake, it will come in ITC not available. If it comes in ITC not available, we will not be able to take ITC with respect to that. Okay, that's what they are telling. GST paid on inward supply should be reflected in 2B under ITC available and should not be restricted. Suppose if it is coming in ITC not available, can we take? No. As per section 38, in few cases, ITC shall be restricted in 2B. What are those few cases where ITC is restricted in 2B? That is given in section 38, which you can see in returns chapter. You just take page number 166. You give the reference there, refer page number 166. Give reference, refer page number 166. That section 38. Information is in page 166. So when you are reading that point, section 38, that is in page number 166, take that page number 166. So 3 conditions to be fulfilled by supplier. In that first condition we understood. What is that first condition? Supplier should file the GSTR1 and he need to report the details. Second condition, supplier should pay the GST by September 30th of next financial year. Third, because of section 38, it will come in GSTR 2B ITC not available. If it comes in ITC not available, we cannot take. Why will it come in ITC not available? Because of the mistake of supplier. What mistake supplier will do? See this. See this. Point number 1. Supplier is a newly registered person. So if you are buying from a supplier who is a newly registered person, this will be coming in your ITC not available. So can you take or you cannot take? You cannot take. Okay. Second, supplier has filed GSTR1 but not 3B. So it will come under ITC available or ITC not available? ITC not available. Means for any prior periods, he filed 1 but not filed 3B. This month again when he filed GSTR1, it will come under ITC not available. Then supplier liability in GSTR1 greater than 3B. Means he paid liability less. Okay. Or he availed more ITC. That is supplier availed ITC in 3B greater than 2B. Supplier has received demand notices. Means what? He defaulted in payment of tax and such default continues. Or supplier is required to pay 1% of liability through cash ledger. There is one provision. Like 1% of the liability they need to pay by cash ledger. If they are not paying 1% of their liability through cash ledger, then also even though they file GSTR1, even though it is coming in 2B, but in 2B it will be kept under ITC not available, then we will not be able to take ITC. Is it clear? What are those situations here? 6 situations you can see. So first, you are buying from a supplier. Ask the supplier, are you fresh, sir? Yes. So sorry, I will not buy from you. Why? Because he is a newly registered person. You understood? Fresh means you don't understand in any other way. So he is a newly registered person. Number 2, sir, are you filing 1 but not filing 3B? Yes. Sorry, sir, I will not buy from you. Are you taking more ITC in your 3B than your 2B? Yes. I will not buy from you. Or are you having any demand notices and you did not pay tax? Yes. I will not buy from you. Did you pay 1% of your liability through cash ledger? No, I will not buy from you. Which means, what does the law says? Like KYC, know your customer, KYS, know your supplier. You understood? Get all these details from the supplier. I don't know which supplier will give all these details. And naturally what happens? We buy without knowing all these things. We will be thinking that ITC will be available, but it goes to ITC not available, which means we cannot take the ITC. Is it clear? Got it here? What are the 5 cases? Supplier. 6 cases, supplier is newly registered. Number 2, filed 1, not filed 3B. Liability in 1 greater than 3B. ITC in 3B greater than 2B. Defaulted and notices is there. Next, did not pay 1% of liability through cash ledger. Now what happens in this case? When it comes in ITC not available, suppose if it comes in ITC not available, what we will do? We will go to that supplier and ask, boss, it is coming in ITC not available, means you would have done any of this mistake, kindly rectify this mistake. As and when they rectifies this mistake, we will get it in ITC available and we can enjoy the ITC. Is it clear here? Now come back to this. So tell me what are the 8 conditions? Come on, first 2. Only registered person can take ITC. Next, inward supply should be used or intended to be used in the course or furtherance of business. Next, 3 by recipient. Should have actually received the goods or services, should be in possession of tax paid document, should have filed 3B. Next 3, supplier. Number 1, filed GSTR1. Number 2, should have paid the tax by September 30th of next financial year, or should not be covered under section 38. Okay. If is covered under 38, it will come under ITC not available. Now see the next part. What is the meaning of input tax? Input tax means either CGST, SGST, UTGST or IGST. Either it is paid under FCM or it is paid under RCM. Even RCM paid also we can take credit, I told you. But it does not include composite tax. What is composite tax? Tax paid under composition scheme. First of all, a person who is opting for composition scheme should not charge GST to the customer. Even if they charge GST to the customer cannot take ITC. That is this. It does not include tax paid under composition scheme. It also includes tax paid on reverse charge. Even IGST on import of goods. On import of goods we pay some IGST in addition to customs duty. That IGST also can be taken as credit. Then see the next part. Contents of invoice for availing ITC. That is, a person availing ITC, one of the condition if you see, should be in possession of tax paid document. What is a tax paid document? Tax invoice. But what is a tax invoice? Any paper, if it contains these minimum details, that is a tax invoice for availment of ITC. What are those minimum details that should be present? Apart from date, what minimum details it should have? It should have description of goods or services. Number 2, it should have total value of supply of goods or services and the amount of tax charged and GST of supplier and GST of recipient and place of supply in case of interstate supplies. 5. What are those 5? Description, value, tax, GST of supplier and recipient, place of supply if it is interstate supply. Then what is the meaning of inward supply on which we take ITC? Inward supplies are broadly divided into 3: inputs, input service and capital goods. What is capital goods? Any goods which are purchased and capitalized in the books is known as capital goods. Then what is inputs? That is not capitalized, charged to P&L is known as inputs. Input service is any service received. Then look into a concept of deemed delivery. Listen. That is, you are placing an order with me, so I raise an invoice to you, but you are asking me to deliver the goods to a third person. I am raising invoice to you. You are a registered person. I am raising invoice to you, but you are asking me to deliver the goods to a third person. In that case, you cannot take ITC because you have not received the goods. One of the conditions for availing ITC is that you should have received the goods. The third person also cannot take ITC because even though they received the goods, but invoice is not in their name. So then who will take ITC? Definitely the billing address only will take ITC. The date on which the third person has received the goods or services, it is deemed that the billing address has received the goods or services and they can take ITC with respect to that. Is it clear? So when the goods are delivered to any person or service are provided to any person on the instructions of the recipient, if the goods or service are provided to any other person, the date on which such person has received the goods or services, which person? The third person has received the goods or services. It is deemed that the recipient has received the goods or services and they can take ITC. This is not only for goods, even for services. For example, if there is a coaching center which is raising invoice in the name of your father, because your father is doing some business, in the name of your father the coaching center is raising invoice, and even though they provide services to you, can your father take ITC? Definitely your father can take ITC. Your parents can take ITC. How, sir? The date on which you received the service is deemed that your father has received the service and they can take ITC. Only one problem, that is, you should be part and parcel of the business. If you are part and parcel of the business, definitely, your father can take ITC. I don't know, definitely you might be into some coaching center already, you would have attended and you would have paid fees. That too CA intermediate and all. So lot of fees they are looting nowadays, like 70,000, 80,000, 90,000 like that and all they are collecting. On the top of that plus GST. And this GST can we take as credit? Nothing specific. Generally I'm telling lot of coaching centers are charging like this, okay? And then in that case, can we take ITC? Why should we lose? Definitely we can take ITC. How can we take ITC? Simple. You go to your father, if your father is having business, any business, GSTIN, and you ask your father to make you as an employee in the business, hardly 1 minute work, one document, sign. So you become part of your father's business. Now you go to the coaching center and ask them, sir, I need invoice in my father's name. This is the GSTIN. Coaching center will tell, no, I cannot give invoice and all, like that provision is not there. You show this, deemed delivery, explanation to section 16 subsection 2. If they are not satisfied, this video bite you show to them, okay? And you tell them that it is possible and therefore invoice needs to be given. They will not give because they have to report B2B invoices and all. They will not give, but they can give. You force them to give so that definitely you can take ITC. Maybe what is the time limit for availing ITC? November 30th of next financial year or date of filing and return. You attended coaching recently only in a year. So maybe you would have attended coaching last year, correct? Financial year 2024-25 you would have attended coaching. Time limit is November 30, 2025. Lot of time is there. You understood? Definitely it is possible and you can go and ask them, so why you lose that money? So whatever GST, sir, at least 5,000 also, it is money only, na sir. Why we need to lose that? And for coaching center also it is not a problem because anyhow they are paying it to government. Actually it is a benefit to you, and for coaching center also it is not going to pinch. Just they need to raise the invoice and government already getting the money. At least this way some 5,000 rupees we will get or 10,000 we will get. We will contribute it to our family. Yeah? You understood or not? That is this deemed delivery. And in case of bill to ship to transaction, billing address can avail ITC. Then, and don't post this and all, don't make it as a reel and don't post it, etc. and all. So whatever I said in English, don't convert into Tamil and don't post it in as a reel and try to get, because see, when GST department comes and speaks to you, you will not be able to handle. I can handle, but you cannot handle that. You understood? Before speaking all these things, so the backup should be there. For me, backup is strong. I don't have any problem. Any case, if it comes, I know how to come out of it. You understood or not? But for you, it will be difficult. So that's why be careful before all these things, speaking all these things. Then, goods received in lots or installments. What is it? Goods received in lots or installments? That is, at a time we will not receive the entire goods. but we will receive it in installments. Example, I am a dealer. You are asking me to deliver some goods, say 100 units. For 100 units, I raised you invoice. First month I am delivering 40. Second month I am delivering 40 units. Third month I am delivering 30 units. When can you take ITC for this 100 units? Only in the last month. So you cannot take 40 units first month, 40 units second month and 30 units third month. ITC shall be availed only on receipt of last lot or installment of goods. Then look into the next one, reversal of ITC for non-payment of consideration to supplier. What is that? If there is a recipient who is not making payment to supplier within 180 days from the date of invoice. I am your supplier, you are my recipient, you have not made payment to me. Even then can you take ITC? Yes. In 8 conditions, is there anywhere it is given that recipient should make payment to supplier, only then recipient can take ITC? Nowhere. Means recipient can definitely take ITC, but recipient is not making payment to supplier within how many days? 180 days from the date of invoice. Then so much of the ITC availed by the recipient, needs to be reversed along with, needs to be reversed along with interest. At what rate? 18%. From which date? Date of, very good, date of utilization till the date of reversal. Again, as and when you make payment to me, can you re-avail the ITC? Yes. As and when you make payment to me, you can re-avail the ITC. Whether it should come in 2B? No. Whether there is any time limit? No. Happily you can take the ITC. That is this. If the recipient has not made payment to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to supplier. For example, within 180 days, you paid 60%, 40% not paid. Means how much you need to reverse? 40% portion you need to reverse, okay? And within 180 days, you did not pay fully, so you reversed fully. Thereafter, you paid 50%. How much you can avail? 50%. You paid 20%. How much you can avail? 20%. Is it clear or not? See this. If recipient has not made payment to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to supplier availed by the recipient shall be reversed along with what? Interest. At what rate? 18% per annum. From which date to which date? From the date of utilization of ITC till the date of reversal. What if you have not utilized the ITC? Interest shall not arise. Interest not payable if availed ITC is not utilized. In 3 cases, this provision will not be applicable. What are those 3 cases? Number 1, supply is covered under RCM. Means who is having the liability? Recipient is having the liability. 180 days condition not applicable. Number 2, supply under 7(1)(c). Means supply without consideration. Our consideration itself is not there. Where from recipient will pay to supplier within 180 days. Number 3, recipient made payment to a third party other than supplier. Means already you paid. You paid to a person on behalf of me. Means to my creditor you already paid. Which means as good as I have received. So 180 days condition is not applicable there also. Is it clear? 3 places. Supply covered under RCM. Supply without consideration. Payment to third party on behalf of supplier. Again, when can you avail the ITC? ITC can be re-availed as and when payment is made to supplier after 180 days. 2 places we have discussed re-availment of ITC. One is what? First one what we discussed. If supplier not filed 3B, then by September 30th of next financial year, we need to reverse the ITC and we can re-avail the ITC. Only ITC pa, interest and all cannot be re-availed. Another place where we saw re-availment is this. If we have not made payment to supplier within 180 days, we need to reverse the ITC. Again we can re-avail the ITC as and when we make payment to supplier. But interest cannot be re-availed, that interest is gone. Got it? And no time limit for re-availment of ITC. Then look into section 16 subsection 3. ITC not available in case of depreciation computed on GST component. For example, you're purchasing capital goods. What is the value of the capital goods? 10 lakhs, and GST on the same is 1,20,000. If depreciation is computed on 11,20,000 under income tax, already you are enjoying the income tax benefit, so therefore you will not get ITC. Then ITC with respect to 1,20,000 not available. Suppose if you add only 10 lakhs to the block of assets, then you can take 1,20,000 as ITC. This common point is there even in section 32 of Income Tax Act also. Then section 16(4), time limit for availment of ITC. What is the time limit for availment of ITC? Already we know 30th November of next financial year or date of filing annual return, whichever is earlier. Whether this time limit is applicable for re-availment of ITC reversed earlier? No. And in case of, there are 2 points, see that in case of debit note, the availment of ITC depends on the debit note date, but not the date of invoice related to such debit note. That is, concentrate. If invoice is given on 28 February 2024, but for this invoice a debit note is given on 25th September 2024. Okay, so invoice is 28 February 2024, debit note is 25th September 2024. What is the financial year for the invoice? Financial year for the invoice is 2023-24. What is the financial year for the debit note? 2024-25. Now, which financial year we need to take for computing the time limit for availment of ITC based on this debit note? So, take the financial year 24-25, A, 30th November 2025 or the date of filing annual return. So, whenever you file GSTR 9, whichever is earlier will be taken. So, don't check the invoice, don't check the invoice date, check the debit note date. Based on that you decide what is the time limit for availment of ITC. Got it? That is this point here. In case of debit note, availment of ITC depends on the debit note date, but not the date on which invoice related to such debit note. Then one newly added point, that is an amendment for May 25 exam, that is in case of RCM, reverse charge mechanism. Yes sir. Doubt in this question, sir? Yes. (29th February). Correct, sir. Correct. First you started with debit note, why are you confusing me with credit note? Correct, pa, it will come, pa, if invoice is 28/2 and if the debit note is given on 29/2/2024, that debit note they will report in GSTR 1 and it will come in 2B. If they miss the date of say 11th, and it will come in next month 2B, simple. Okay. Of course, mismatch will come. Who said it will not come? It will definitely come. So, as per your records, as per your 2B, there will be mismatch because they are filing it late. That already I told you. If GSTR 1 they file it late, or if they are reporting it late, definitely it will be coming in our 2B next month only. So, there will be a mismatch. Means don't take this month, you take the ITC in the next month. Okay. After class. Next, in case of RCM, where the registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availing ITC. So, this is a very crucial amendment. Before and all it was not there. RCM liability whenever we used to pay, that month itself we used to take the ITC. But now they kept a twist here. That is, whenever you pay the RCM liability, not that month you can take ITC, but for RCM, you will give a invoice to the supplier. You will give a invoice to the supplier. Why invoice to the supplier? There is a concept of self-invoice. When the supplier is unregistered and supplier is not issuing invoice, okay, in case of RCM, because liability is on recipient now. Now recipient should issue a self-invoice to the supplier. Is it clear or not? Ayya, I am supplier, you are recipient. When the supply is covered under RCM, I will not give invoice to you. Then you should be giving invoice to me called as self-invoice. What is the time limit within which that self-invoice to be given? Within 30 days from the date on which you receive the goods or services, you should give the self-invoice. This is an amendment, okay? This is also an amendment. Now, whenever you give invoice to me, that month only you can take ITC, not the month when you pay tax to government. Is it clear or not? Read that. In case of RCM, where registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. You got it? Next. Time limit for availment of ITC for certain financial years, that is for financial year from 17-18 to 2021. But this point may not be tested in exam because this is just a stopgap provision from financial year 17-18 to 2021 if ITC is availed beyond the time limit. So in those financial years, they would have taken ITC beyond the time limit, but maximum by November 30, 2021. So 17-18 financial year time limit would be 30th November 2018, 2019, 2020, 2021, like that. So if they have taken the ITC beyond the time limit also, but maximum by which date? November 30, 2021. At that time, they have rejected the ITC. GST department rejected the ITC stating that, boss, you took the ITC beyond the time limit. Now, government, to give a benefit to those people, they came out with a provision, even if those ITCs were rejected at that time, now you can enjoy the ITC. Got it? So, because Supreme Court gave instructions to the central government that what you are doing is wrong, for these financial years GST law is not that much implemented, so therefore give a relief to the taxpayers, because of which government is coming out with this provision, and only for financial year 17-18 to 2021. But what is the time limit by which they should have taken ITC at that time itself? November 30, 2021, but it should have been rejected by the department, and now they are allowed to take, even though it is in violation of 16.4. Then next one, section 16.6. What does 16.6 says? This is also Finance Act 2024 amendment for May 25. That is, registered person can claim ITC on such invoice or debit notes in any return file within regular time limit or 30 days from the revocation order, whichever is later, in case where their registration has been cancelled. So let me discuss with you first. Whenever your registration is cancelled, carefully listen. Your registration is cancelled on one date, okay? Say 1st April your registration is cancelled. Then you can make an application for revocation. What is the meaning of application for revocation? Withdrawal of cancellation. And they passed a revocation order. They passed revocation order on 30th September. 1st April your registration is cancelled. 30th September they gave a revocation order. Now, some ITC you could not take. Why you could not take? Because cancellation order passed. Cancellation order passed, so during this period you could not take the ITC. Now they revoked the cancellation order. But when they revoke the cancellation order, the time limit to avail ITC is over. Is it clear? The time limit to avail ITC is over, because the maximum time limit by which ITC to be availed is 30th November. Say that 30th November is missed, for example. Then in that case, can I take the ITC? Yes, I can take the ITC even after 30th November, but within 30 days from revocation order. Is it clear? Within 30 days from revocation order, whichever is later, whichever is later. So kindly make note of this somewhere in your notebook or any other place. Financial year 2024-25, financial year 2024-25. Okay, and what happened for this financial year 2024-25? On 30th April 2025, registration cancelled. Registration cancelled. On 30th September 2025, revocation order passed. Okay, for financial year 24-25, 30/4/2025, registration cancelled and revocation order has been passed on 30th September 2025. What is the time limit for ITZ? What is the time limit for ITZ in this case? They have brought in one new provision. What is it they are telling? A regular time limit. What is a regular time limit? What is a regular time limit? 30 November 2025, correct? 30 November 2025, or B 30 days from revocation order. 30 days from revocation order. What is 30 days from revocation order? 39/2025, 30 days you take. 30 October 2025, whichever is earlier or later? Later. What is later? 30 November 2025. Is it clear? 30 November 2025 only later. The regular time limit itself is later. Now, if revocation order is passed on, if revocation order is passed on 31st December 2025, then what will be the time limit? Then time limit is, if revocation order is passed on 31st December 2025, A, the regular time limit. What is the regular time limit? 30th November 2025, 30th November 2025, or B, 30 days from revocation order, 30 days from revocation order, that is 30th January 2026, whichever is later, which is later, that is 30th January 2026. Got the clarity? So possibility in MCQ, they can ask this, or they can make a question also. They can make a question also based on this. Okay. Now say this. Time limit for availment of ITC in case of revocation. These two are the latest amendments. What is the procedure for claiming the ITC? Suppose for old financial years, we missed taking ITC in this case. Both the cases. First one is anyhow old financial year only. Second one also for some earlier financial years we missed taking ITC. Can we take it now? Yes. See the procedure. By 7th April 2025, still few more days is there. So if any person whom you know, they have missed taking ITC, now also, today also you can tell, because 7th April is the time limit. 7th April 2025 is the time limit for taking ITC. Registered person to whom ITC is available under 16.4 or 16.5, in the past years they have not taken, but they are eligible because of these two sections. They can make an application by 7th April, and within 3 months, if the officer is satisfied, they will pass a rectified order and we can enjoy the ITC. Suppose if the officer is not satisfied, then they will reject. Okay, this is the procedure. So therefore, for earlier financial years, if we missed also, we can take the ITC, and 7th April the application has to be made. This is about section 16. These are all the amendments that we have in this page. Okay. Next, thereafter we have apportionment of credit and blocked credits and section 18, that is input tax credit in special cases. But related to this section 16, I told you amendments na. On that we have some questions on amendments. We will discuss that. Okay. So please see this. Look into question number 12. Question number 12, page number 56. Question number 12, page number 56. See that. So we will complete this question number 12 and question number 13. Okay. And with that we will leave for the day. And remaining portion we can see tomorrow's class. But please focus, just 2 questions only we will complete. Infosys Limited, a registered company in India, is engaged in IT consulting and software services. Infosys Consulting Incorporation, its related foreign entity based in USA, provides software development support and consulting services to Infosys Limited in India. Both entities are related persons under the GST provisions. So it is import of service from a related person. Is it clear? See there, Infosys Limited is importing service from Infosys Consulting and both are related. So it's an import of service from a related person and definitely it will be coming under RCM. On October 2024, Infosys Consulting provides software consulting service worth rupees 20 lakhs to Infosys Limited. Since this transaction is an import of service, Infosys Limited is required to pay GST under RCM. Additionally, Infosys Limited is eligible for full ITC on this transaction. Moreover, Infosys Consulting Incorporation also provides strategic advisory service to Infosys Limited without issuing an invoice. The domestic entity Infosys Limited estimates the market value of these services to be 5 lakhs, but no official invoice is generated for these services. Answer the following based on the above mentioned facts. Point number 1. Whether Infosys Limited is required to issue any invoices to Infosys Consulting Incorporation. I told you already, in case of RCM, a self invoice to be given by recipient to supplier. Generally, invoice will be given by supplier to recipient, but in case of RCM, a self invoice to be given by recipient to supplier. What is the time limit within which that self invoice to be given? Within 30 days from the date of receipt of goods or services. What is the date on which they have received the goods or services? October 2024. From there, within 30 days, they need to give. Look into the answer for the first part. This is also an amendment here, but this amendment is in tax invoice. In tax invoice chapter, there is only one amendment, that is this amendment only. Okay. So Infosys Limited shall issue invoice to Infosys Consulting Incorporation within 30 days from the date of receipt of services. Then, who is required to pay GST in the present case and what is the value on which GST is payable? Who is required to pay GST? Infosys Limited is required to pay GST under RCM as the same is import of services. If Infosys Limited declares 20 lakhs as the value of software consulting services from Infosys Consulting Incorporation in the self invoice, compute the GST payable by Infosys Limited. Simple, 20 lakhs into 18%, that is 3,60,000. Now I want to add one more point in this question. Okay, point number 4. When ITC can be availed by Infosys Limited? When ITC can be availed by Infosys Limited? When ITC can be availed by Infosys Limited? What is your answer? When they can avail ITC? As and when they pay GST or as and when they pay money to supplier or as and when the invoice is issued? So as per CBIC circular, as per CBIC circular, as and when invoice is issued, as and when invoice is issued to Infosys Incorporation outside India, comma, ITZ can be availed. ITZ can be availed by Infosys Limited. Is it clear? As and when, as per CBI circular, I will dictate you right. As per CBI circular, as and when invoice is issued to Infosys Incorporation outside India. As and when invoice is issued to Infosys Incorporation outside India, comma, ITZ can be availed by Infosys Limited. Next, question number 13. TechPro Solutions Private Limited, a registered person under GST, had its registration cancelled by the proper officer on June 1 under section 29 due to non-compliance with filing returns. Okay, you may get a question similar to these lines. The company had received input services for which it was eligible for ITZ during the financial year 23-24, but the ITZ had not been availed before the date of cancellation. On August 25, 2024, TechPro Solution applied for the revocation of the cancellation of registration under section 30, and the registration was revoked by the proper officer on September 5. When the registration was revoked? September 5, allowing TechPro to continue its business operations. However, during the period of cancellation, TechPro Solutions received several invoices and debit notes for supplies made between July 1, 2024 and August 25, 2024. The company is now considering the possibility of claiming ITZ on invoices pertaining to the supplies made during period June 1st to August 25. June 1st to August 25 means which financial year? Which financial year? Financial year 24-25. For financial year 24-25, what is the time limit for availment of ITZ? Regular time limit 30th November 2025, correct? Or what is 30 days from revocation order? What is 30 days from revocation order? September 5. 30 days is October 5, 2024. Whichever is, which is later, means regular time limit itself is later. Is it clear? So they can avail the ITZ by 30/11/2024. So time limit of availment of ITZ is normal time limit in the first case. First case it will be regular time limit. What is that regular time limit? 30/11/2025. Okay. So that is the answer for the first case here. Time limit for availment of ITZ for invoices for the period 1st June to 25th August. It is 1st June to 25th August 2024. Correct only. Financial year 24-25, that is 30/11/2025. Got it? Or date of filing and return, whichever is earlier. So 30/11/2025 only will be taken. Is it clear? Correct only we did. Second, debit notes issued during the financial year 23-24, but not availed before the date of cancellation of its registration. Now tell me for financial year 23-24, A, 30th November 2024, or B, what is that B? 30 days from September 5. What is 30 days from September 5? 5th October 2024, correct? Whichever is later, still it is 30/11/2024 only. Am I right? Suppose if the revocation order is passed on 15/12/2024, I have given below note. If the revocation order is passed on 15/12/2024, then which time limit we need to take? The regular time limit 30/11/2024, or 30 days from this date 14/1/2025, whichever is later, that is 14/1/2025. Understood? So this way they can ask a question related to cancellation of registration and connecting with ITC, okay, because there is an amendment in this place. Fine. So with this, we completed 3 major sections today in ITC. Section 41 availment of ITC, 49 subsection for utilization of ITC, and section 16 conditions for availing ITC. Please listen, just 2 minutes, 2 minutes. That is, tomorrow we will complete input tax credit. To the extent possible, it will be like easily it will be over. Remaining topics, to the extent possible, I will try to complete. But I want to focus on 2 chapters mainly, value of supply and place of supply, because that's where approximately 75% of the portion will be over, means from exam point of view.